Welcome to DC Startup Week. We're so excited to have everyone here today. I want to introduce myself. My name is Rachel Koretsky, and I'm here with Corey Lawrence, two of the organizers for DC Startup Week. We're coming to you live from WeWork in downtown Washington, DC. I want to thank everyone for joining us today. DC Startup Week is a 5-day conference every September focused on building the startup community. We want to give a quick thank you to our title sponsors, Next, Insperity, Wiz, and Technology Rivers. We're in day one of DC Startup Week, so we're so excited today to have our first Founders Focus event partnered with Upside Business Travel. If you have any questions throughout the talk, please put in all caps question at the start and within the chat so we make sure we don't miss any questions during this Ask Me Anything sessions. We're so excited today to have Scott Case and Tim Hwang to speak on the Founders Focus Ask Me Anything, all different topics, everything you're able to ask to make sure that we hit all of your questions as you're growing your business, starting your business, or trying to survive during the current situation we're going on today. Please join me in welcoming Scott and Tim to the DC Startup Week stage.
Hey everybody, thanks Rachel, I really appreciate it. And welcome everybody to a special edition of our Founders Focus series. I am super excited to be here. I am also based in the DMV. I am currently outside of Washington in Potomac, Maryland, joined from what has been the space that I have spent the last 6 months mostly in, which is like a 12 by 14 room. We're super excited. I am Scott Case. I'm the co-founder and CEO of Upside Business Travel, and I'll be your co-host today. This meeting is being recorded. It's also being streamed live on Facebook. Please turn on your cameras if you're brave enough. It's always helpful for us to see happy faces and to give feedback for us. So I at least use gallery view so I can see everybody. So if you're brave enough to put your camera on, that's awesome. Most of it will be recorded from myself and our co-host Tim. If you have questions, please post them in the chat. You are muted, but we will pull up the questions along the way. I have a few starter questions for Tim, and then we'll wrap up. And if we have time at the end, we will do a more formal Q&A if needed. We'll try to wrap this up around 10 minutes before the hour so that you'll have a little bit of a break between things. And I'll hand it back to Rachel, who can wrap things up for DC Startup Week. So with that, we are joined by the founder and CEO of Fiscal, Tim Hwang. He's got one of the largest DC tech companies, powers more than 5,000 of the world's most influential law firms, legal departments, and governments. He's going to talk a little bit more about that. Prior to founding Fiscal, he started his career on the Obama 08 campaign in assisting in the election of the Obama administration. And I'm sure he's going to share a little bit more about whatever he'd like to when he introduces himself. So Tim, over to you.
Great, Scott. Well, thanks everybody for having me. I really appreciate the opportunity for us to kind of have this conversation. And so I guess, what we can do is kind of start off with a little bit of my background that kind of Scott alluded to, and just a little bit of the founding story here at Fiscal. And hopefully that kind of starts a broader conversation about some of the topics that hopefully we can cover today. As Scott has mentioned, I started off my career in politics, first, on the Obama campaign back in 2008, and had the unfortunate or fortunate opportunity, to serve in both local politics as well as kind of in party politics as well. One of the things that you realize really quickly about politics, particularly about the DC region, is that DC is sort of a company town in many ways. Politics is the game, and a lot of the industry and people and conversations and the like kind of revolve around some of those topics. And so, as I was having these conversations with folks, I was trying to figure out sort of what are some of the biggest challenges that existed as it pertains to this city as well as the industry itself. And one of the things you really start an appreciation for when you're in government is that a lot of time in government, it's trying to understand what other people in government are doing, right? So if you're sitting in a regulatory agency or on Capitol Hill or whatnot, a lot of your time is basically spent trying to understand what other branches of government are doing and what other parties are doing. And so I remember thinking how inefficient this whole system was, and being able to think about sort of how we can create a technology solution to really resolve that. And so back in 2013, a couple of buddies of mine from high school, actually, we all went to high school up in Rockville, Maryland. We went off to Silicon Valley and started a company. That company was Fiscal Note. And really our initial idea, which really hasn't changed at all over the course of the last couple of years, has been to take all of the world's laws, so legislation, regulations, kind of legal documents and the like, structure them, normalize them, make them searchable, make them usable for our clients to be able to access, and then really build sort of the world's first digital repository of law and regulations. And so we did move out to Silicon Valley, start the company, but we made the better decision to move back to Washington, D.C. And put our headquarters back in D.C. back in 2014, where we've been here ever since. And it's been definitely a wild ride, but happy to dive into any of those topics. But it's been super interesting and happy to be part of this DC tech community.
Awesome. So tell us a little bit more about why you moved back, if you can. What was the draw? Obviously, there's an anchor point here from a government standpoint and from your product perspective, but was there some other driving force?
Yeah, I would say there's two things. Number one, it's very personal for us, right? And so, all of us came from this region. We graduated from Montgomery County Public Schools. We wanted to really build a community, a company around this community. And so, actually, our first office was about a 10-minute drive from our old high school in Bethesda, Maryland. And we were really, building and scaling our company, with our friends. I mean, it was the first probably 5 or 6 engineers. Were high school friends or college friends that we had recruited into the business. I think secondly, and just as important is that, to your point, Scott, our business is servicing attorneys, lobbyists, government affairs, public affairs, communications professionals, trade associations, government agencies, and so it just made sense to be out here in Washington to be closer to our customers.
Got it. So talk a little bit about, you talked about those customers. We're going to go back to stay in the Wayback Machine for a few minutes here. Who were your initial customers? What was the initial business model? And has that changed at all over the last, I guess it's been about 6 years. So where did you start and how has it evolved, if it has evolved over the time period?
Yeah, I mean, I know that in the startup field, there's this really big emphasis on iterating and pivoting and the like, which I think are very, very important on a day-to-day basis. The thing about our business, and I was just looking at our business plan from 2013, it actually hasn't changed at all. So everything that we said we were going to do, we went off and actually executed against. And I think part of that was just because, we were going into an established market, with established players, and we were coming in as a disruptor, with a better product, cheaper solution, faster solution, with a much better kind of set of capabilities. And so there was sort of an established ecosystem of players to kind of go after. And so, our business model is a typical kind of subscription, recurring revenue business. We have not pivoted that business at all, since 2013. Our product continues to be aggregating legislation, regulations, government documents and the like, and being able to kind of service that to our customers. If anything, I would say, and this kind of goes into the nitty gritty of things, but in enterprise software, we initially started off thinking that the information and data portion of our business would be the sort of hottest ticket items. Back in 2013, sort of predictive analytics and machine learning and the like were super, super hot. And those fields kind of determined the directionality of the industry. But I think probably over the course of the last 3 or 4 years, that market has shifted towards workflow solutions. And so we've invested much more heavily on the workflow side. And then I think the last thing is customer base, right? And so, we initially were testing out and iterating a bunch of different clients, we're going to get clients in, the financial services space, the healthcare space, investors, whatever the case is. And I think eventually we kind of stumbled upon the customer base that we currently have today, which we were able to kind of scale quite aggressively. But a lot of this kind of comes back to pivoting and iterating on the edges. while really having conviction in the kind of core things that you need, need to get done at the end of the day.
Yeah, it sounds like, and you correct me if I'm off base here, but it sounds like the vision for your business and your product and even the core business model hasn't changed. But that doesn't mean that your business plan was a lockdown and you had 7 years of execution to go do. That iteration on the edges is kind of where both the innovation happens, but it's also where it allows you to optimize for things. Is that a fair characterization of kind of when you look back 7 years, it's more on those high level frameworks?
Yeah, a lot of the things that we were testing out in the beginning days, I would say were, what is the price point, by which, this market is gonna hold, what are the, the 2 or 3 steps of innovation beyond whatever the current market currently has, to really provide product differentiation. What are the bundles and the sets of data sets that our customers are looking for? Our business is actually quite similar to, if you've ever used a Cap IQ or FactSet or Morningstar, any of these kind of information products, and so really thinking about what sorts of data sets are customers looking for, and then ultimately customer segments, right? So do you go after big companies, small companies, government agencies, nonprofits? Which ones are the easiest to get into? Which ones are the highest price points? How do you align that against your budget and your capital strategy and your hiring? So those are the things that really need a lot of innovation.
So who was you don't need to give a name, but which of those 4 buckets was your first customer or set of customers when you first started?
So it was a mix. So I would say the 2 kind of categories were mid-sized companies and trade associations and nonprofits. These are organizations that don't have substantial resources to follow what's going on in Congress, the 50 state legislatures, city councils, but still need technological solutions for support, and we're being underserved in the current market. And so I think that we went off, targeted those, and I mean, honestly, it was kind of stumbling into that customer segment because I'm not even exaggerating. I remember my co-founders and we had a massive Google spreadsheet. We just filled it with thousands and thousands of customer names and just cold called customers for weeks on end, trying to understand, what their needs were, what price points they're willing to pay, trying to understand sort of generally what the sales cycles would look like. And then we just took all that feedback and then just started crafting some a strategy around it, right? But fundamentally, it just kind of comes down to, I think we just kind of looked at the market, segmented out, and just tried to get as much data as possible to kind of start building out a business around it.
I'm gonna emphasize something there because we'll as we go along this morning, we'll sort of accelerate past to where Tim is now from a business development standpoint, sort of what stage he's at. But those beginning stages, we have a lot of folks here that are early stage founders, first time. I've seen some stuff come up in the chat. This is their first time as an e-commerce business. How do you get things started? That notion of like really doing the customer discovery work and the customer validation work to go talk to hundreds or thousands of people to sort of shape those things and identify what your first targets are. You got to do the work. It doesn't just magically appear and a bunch of customers just show up and start buying your product. You co-develop both the product, the pricing, as well as who your targets are. It sounds like you went through that cycle. Do you remember roughly how long before you hit on those? All right, we're going to get after these trade associations and the mid-sized companies. Was it, a few months? Was it a few weeks? What was the basic time horizon there?
I would say it was probably about 6 or 7 months in. But we were doing the work. I mean, we were doing the hard work. I mean, literally every day for 4, 5, 6 months. I remember actually at the time there's a parallel company that sort of, in a totally different sector that was kind of taking off called Zenefits. And I remember watching a talk by some of the Zenefits staff where, they sort of asked, how do they go after the market and how do they grow so quickly? And so basically it was sort of this methodical approach to collecting data on their customers. They basically collected this list of hundreds of thousands of small businesses, shot out, a bunch of different A/B tested sort of emails and value propositions, and then basically just methodically measured out the conversion rates and the like, and then just channeled their sales and marketing resources straight into those customer segments. So I think for us, it probably took about 4 to 6 months before we had enough conviction where we could start pouring hundreds of thousands, millions of dollars into sales and marketing, and then kind of really chasing after a specific market opportunity.
Awesome. So I guess maybe fast forwarding a little bit, you've obviously scaled the business over time. You got to a point, I'm going to get the timeline wrong, but I think it was two-ish years ago, and you'll correct me on it, where you got to a place where one of the next steps was to potentially acquire other businesses. So you had reached a place. Can you talk a little bit about what drove the decision-making around that, and why you ended up actually doing that versus continuing to grow organically, or some other strategy you could have employed? What was the decision-making? And you'll remind me which thing you acquired, because I'm going to rattle off the wrong one for sure.
Yeah, I think, when I think about sort of two things, number one is the technology ecosystem, right? And how major technology players have sort of come together over the last couple of years, whether it's, at the biggest of the big example, right? You're talking about Android and YouTube and whatnot being folded into the Google empire, if you will. And then, even the sort of Facebooks and whatnots of the world, kind of being really built through M&A transactions, from the news feed to photo tagging to, WhatsApp, Instagram, all these different kind of capabilities. I think that operational, you think about, how quickly is it going to take to build something from the ground up? How quickly do we think we can scale it? And then ultimately, how much money is it going to cost? I know it's quite simplistic sort of think in those contexts. There's a lot of very smart investment bankers that, can run the numbers and tell you, this and that, whatever. But fundamentally, I think it comes down to, that we have the best product. We know we have the best team, all these different things. How can we kind of continue to consolidate our market position and really, service our customers in the best way by accelerating some of the best products, bringing those in-house and being able to kind of scale up those businesses. So that was the number one driver. I think number two is the nuts and bolts of finance and how that interplays with technology. And so I think from our perspective, a lot of many of our competitors in our market, have been around for decades. They've been around. Some of them, in some cases, have been around for over a century. And so the level of innovation that the market has seen is quite low. And one of the theses that we had was that we could go off and acquire specific data sets or content sets that we felt like could be really additive to our customers, and that we could take those businesses and make them much more efficient by injecting technology, machine learning, artificial intelligence capabilities that really enhances the customer experiences and really makes them much more competitive. And so now there's sort of two ways to go about doing that, right? Number one is you go raise a ton of venture capital. You raise your B, C, D, E, F, G, H rounds or whatever, and eventually go public. Just keep raising capital. And so what ends up happening from a founder perspective is that you get diluted quite substantially. In many cases, and you see this in enterprise software and some of the recent IPOs, the founders are diluted down to, 2, 3, 4, 5% of the businesses that they helped to co-create. So I think that, what we decided was that if there are alternative ways to grow our business, find alternative forms of capital, alternative forms of growth that don't require substantial dilution along the way, that those would be areas that we feel fairly confident about being able to drive forward on. And so, a lot of our strategy, both has been organic and inorganic, but really thinking through from a founder perspective, how to maximize, shareholder value by being able to drive that growth over the course of the next couple of years or so.
So we're going to come back and talk a bit about capital strategy, and for those on the Zoom here that are a little bit further along, or are starting to even just plan your first round of capital, whether that's a seed stage or a more substantial Series A. One of the things that I often tell founders is highly related to Tim's point, which is once you're on that fundraising train, once you've decided to go after, so let's say a venture-backed strategy, you're basically going to be giving up about 20% of the company every round, sort of forever. And when you do that, depending on the valuations, that 20% is sort of coming out of you and the other founders and other investors. That's what drives that dilution. And depending on how many rounds, you keep cutting into kind of what's left over. And so being savvy about the financial structures that you can use to bring capital in for growth that don't necessarily require you to sell equity in your company is a big deal. So I want to start, Tim, by saying, did you go to school on that yourself? Was one of your co-founders particularly adept on the finance side? Did you hire a fantastic chief financial officer? Like, where did you bring the expertise in to sort of make some of those decisions and get creative about how you funded your growth?
Yeah, I wouldn't say that any of us really had a strong finance background. I mean, none of us worked in banking or accounting or anything like that. I think we're all very strong. We're also very strong self-studiers, and so I literally remember when I was like a Series A founder or something. I bought a textbook on accounting, and as dry as it was, just kind of went through and started reading it, just to make sure that we have a pretty good understanding of the language of business. And so I think, when it comes to really thinking through financial structures and the like, I mean, we had a lot of support from our board, from our investors, from our advisors and the like. But, ultimately speaking, we're still a founder-led company. And, what that means is that, we'll take in all the advice, we'll take in all the information, we'll obviously do our own homework. But we kind of went off and made our own decisions around kind of how to move forward on some of these acquisitions or financing structures.
Got it. So related to that, I want to talk a little bit about, you talked about expansion opportunities. One of the questions we got was, how do you think about expansion? And then are you focused on different geographies, or offering more services, expanding to different classes of customers? You had the 4 that you talked about earlier. As you think about it, what's your strategy for that growth and expansion? You talked about acquisition being one piece and injecting technology in, but how do you expand your total addressable market, for example?
Yeah, it's a great question. I mean, I think it comes down to, there's a couple ways to think about it from our perspective, right? So I think about product expansion and then go-to-market expansion. And so, McKinsey has this great kind of horizon 1, 2, 3 kind of thinking about it, right? So, current market, current product, how do you grow within that context? How do you think about current product, new market, and growing within that context? And how do you think about new products, new markets, and growing within that context? And so when it comes to our product lines, our business is quite simple. I mean, we collect legal data and we sell it to people that consume legal data. The way that we grow our business is we add more legal data sets, in new countries, for instance, or in the US, diving much more deeply into local, county, municipal information and data sets that our customers can consume. When it comes to international data sets, it's thinking about sort of legislation and regulations in Eastern Europe and the Middle East and Latin America and Southeast Asia, and being able to kind of service that to the world and opening up those markets for our customers. When it comes to kind of commercial execution, commercial growth, we are hiring quite aggressively, I would say, in Europe, in Asia, increasingly looking at Southeast Asia and sort of broader Oceania, really thinking about opportunities for us to take our existing products and grow them in new markets. And so, our kind of go-to-market capabilities around sales, marketing, customer support, customer success, account management, all those things, we are operationally building out those capabilities. And then on top of that, of course, thinking through kind of new products and new markets, right? So I can't speak individually to the new products themselves just yet because we haven't launched them. But one of the things we're finding out now is that as you get bigger as a company, the core engine of your growth is innovation, and really thinking about how do you drive that second, third, fourth, fifth leg of business? The example that I always give is of Apple, right? I mean, you start off with an iPhone, and you got to expand into this new iPad, and you got to build out this new AirPod business and whatnot. And so, building out, new products to drive continuous growth and innovation is something that we were very, very focused in on. And so, what that means is that we're exploring entirely new markets that are adjacent to our business. We're trying to figure out, are there places where we can leverage our brand, our customer relationships, our existing product and technology expertise to kind of build new products in new markets. And that innovation timetable is much wider, but something that I think we're very keen on. So I'll give you a good example of a business that's doing extremely well. Is we have a subsidiary called Data Hunt that we launched a little less than a year ago. Our core business basically is ingesting, structuring, normalizing unstructured data, and then selling it to customers. So we decided, what if we took that business, our technological capability, outside of the legal realm, that ability to ingest and extract and normalize unstructured data, and we sold that machine learning technology to other businesses. That company is now grown quite aggressively, primarily out in Asia, but it has about 24 enterprise customers today that are really kind of leveraging our technology into a broader platform ecosystem. And so we are thinking, how do we kind of take our existing technologies and the like and really build out these adjacent businesses over time?
You brought something up. You obviously brought up geography, which is both creating, taking existing products and selling them into new geographies or new markets. When you think about your business, you said collecting data and then basically turning around, packaging it up and reselling it to those that consume it. Are you starting with the demand side, or are you starting with the supply of that data, or are you running both? So Google is famous for their mission to organize the world's information. Do you sort of take it that way and say, look, we're going to scoop up data whether we know what to do with it or not, but as long as it's in this zone, we're going to figure out how to acquire it? Or are you looking at the demand side and saying, here's the kinds of data products that our customers are looking for, let's go source the data to do it? Or is it a combination of the two?
Yeah, so the supply side is restricted primarily by your resourcing as a company, right? So how many engineers you have, how many product managers you have, what your go-to-market capabilities and your sales and marketing staff looks like. And so, you're always going to be constrained on the supply, your ability to kind of collect new and broader information. And, we're not as ambitious as trying to go collect every website on the planet, but, certainly, every government, in existence, from national parliamentary information all the way down to a municipal regulation, in Malaysia. So we've got to prioritize basically all those items based off the resources that we have internally. And we are very, very well aware of our customers and what they're asking for. So we're very attuned, very keen to kind of understand from our customer perspective, what information are they looking for? What pain points are they trying to resolve? If you are in the ride-sharing business, for instance, your primary regulatory regime is at the municipal level. And so, how do we make sure that we're kind of collecting that information that makes it actionable for our customers? If you are a global medical device company, you're regulated primarily at the national level by food and drug regulators. And so how do we make sure that they're getting the information that they need to do their job successfully? I think ultimately the kind of the crux point in the middle comes down to prioritization, growth expectations within our existing customer base, and then how big of a pain point is it to our customers. And so our product managers, every single day are kind of making those prioritization decisions to make sure that they're matching the needs of our customers with the resourcing capabilities that we have internally.
Cool. Before I shift gears to talking about team and in particular what's been going on in the pandemic, we have a question about, you mentioned a McKinsey report or study. Do you happen to remember the name of it so that we can post it or go digging for it for one of our guests?
Yeah, I think it's, I don't remember the exact name. It's three horizons of growth. It sort of talks about your horizon 1, 2, 3 elements and the like.
Right. 3 horizons of growth. we'll have our producers do a little digging and see if we can post it to the chat. With that, I want to shift gears to team. So a lot of us have been figuring out, especially those of us who have broader teams of dozens or hundreds of people. You obviously had a pretty distributed team pre-pandemic. Thinking pre-pandemic first, how did you go from all of you being in the DC metro to kind of adding your next satellite office or your first remote team? And what did you learn by doing that? Like what was that like to make that decision? Was it very early in the development of the business, or did it come along a little bit further?
Yeah, I think our business, we're very lucky, and I understand, it's very challenging for many founders, particularly with a physical nexus to the world, right? I mean, if you're in manufacturing or in retail or any of these sort of physical locations, it's been very, very challenging. I've met a lot of friends who kind of are sitting in those categories, are really trying to reimagine their businesses. I think for us, to be totally honest, I mean, it wasn't that much of a transition. I think, when we kind of were starting off our business, in the early days, at 10, 20, 30 people, I mean, you just sort of naturally evolve into becoming a remote company, right? And you've got people that are traveling, you've got, engineers that are kind of, we had a very flexible work from home policy. So people were kind of always working from home on any given days and the like. And so you start investing really early in things like, Google Hangouts and Zoom and all these different things. And then, then we started growing, right? And we had to, start building a sales office in New York. And then we started hiring people in Europe. And we have this team out in India and Korea. And, then you starting to manage their time zones and trying to understand and be flexible around kind of people's living situations and like when you're doing things like company all hands. And so this is all pre-pandemic. I mean, we kind of were already operating at this point where we had people in, multiple different time zones, across East and West Coast and in Asia and Europe. And so, the other element that I would say is, around COVID, I think Americans are really caught off guard, with COVID, maybe in, late February, early March. For us, we do have staff members in South Korea, for instance, where, they were on the pandemic within, the first 2 weeks of January. And they had shut down their office, and we were sort of getting reports that this thing was spreading, through Hong Kong, through Australia, through Singapore, and we sort of putting in place travel advisors and the like. And so when it got to sort of mid-March, we weren't completely caught off guard, but we sort of had an understanding that we were probably going to have to shift to a virtual work environment for a while. So a lot of kudos to our management team and our senior leaders and our employees really for being agile and flexible. But at the end of the day, I would say it probably took good 48 hours, for us to make the decision and turn around and get people their computers and their office supplies and the like, and really start working, virtually. And a couple of hiccups along the way, right, in terms of kind of delivering some operations and VPN and things like that. But overall, the infrastructure for being able to deliver this stuff, I think we're in a very lucky place. And I think it speaks to, the resilience of our employees, but also the sort of the way that we had grown our business, over the last couple of years was primarily, just thinking about kind of virtual interactions and being able to collaborate, through these contexts.
So talk a little bit about the team. You've grown, you've added people. You just talked about that you're hiring a lot of folks. Have you established a kind of a recruiting strategy or a recruiting and retention strategy within the business? And what are the kind of key principles to the types of people that you look for, and how have you brought them on over the course of the business, either in the last few years or throughout the 7 years you've been building the company?
Yeah, so the core element of our people strategy fundamentally comes down to our culture, and it's explicit set of cultural values that we laid out for the company from the very beginning. I mean, I like to say this because it's true. When I started the company with two of my co-founders here, even before we wrote a business plan, a product strategy, we wrote down, okay, guys, if we quit our jobs or all these new opportunities, and we build a company that we personally want to work for, what are the things that we want to see in that company? We want to see people that really own their jobs, have a strong sense of responsibility. We want to see people have a strong bias for action, really put an emphasis on action orientation and experimentation. We want people to really be transparent and not sweep things under the rug, really find that truth. We really want people to consider it like a family-like environment. We kind of support the family and support one another. And so as we think about sort of building and scaling our business, in terms of the people, we always bring it back to the culture and then the explicitly stated cultural values that we have. And so what does that mean? Because a lot of companies talk about culture and they talk about, these values and the like. We will operationalize those, right? So we will say in the interviews, here's the things that we're looking for. Here are the questions that we're going to ask that are going to align against our values. People are going to get scored specifically on values alignment. We're going to put performance, at least half of your performance metric around how well you align against performance or around the culture. Your promotion, for instance, is going to require specifically, if and when you get promoted, how does this employee line up against the cultural values of the business? And so, without operationalizing and putting in place the managerial aspect of the culture, it just doesn't get implemented. It's just sort of something that people talk about. In our company, I would say we do put a very heavy emphasis on culture, and that served us quite well as sort of a North Star, if you will. Now, we haven't always been perfect. No company ever is, but ultimately, even if we drift apart, for a couple of weeks or for a couple of months or whatever the case is, the thing that kind of grounds us back to what type of company do we want to be is, or the cultural values that we kind of put in place as an organization.
That's awesome. So you talked earlier about innovation, and a part of the culture being together and alignment there is a key driver to sort of support that. But can you talk a little bit about with a team so dispersed, you've bought companies and brought them in and integrated them into the business. How have you maintained a sense of innovation? Because as you point out, you do have competitors. Some of them are incumbents that are dated and they haven't updated things, but you also have some companies that are competing with you that are using similar technologies and pushing the envelope. And maybe on a global stage in particular, you may not be the only one that's showing up in some of the markets that you're in that has a technology-driven product like yours. How are you keeping that innovation as a driver, and what's your strategy around it?
I think that fundamentally what it comes down to is expectations of an organization, right? And so as a CEO, one of your jobs is to create expectations among senior leaders, and make sure that your senior leaders are aligned against whatever goals that you're trying to achieve as a company. If you tell your senior leaders in your company, that you need to do whatever it takes to execute, don't worry about innovation, just focus 150% of your time on hitting the targets no matter what. I think that's where you're going to get. You're going to get people that are very narrowly focused on hitting the quarter. It's not that they're incapable of innovating. It's just that that's what you're focusing people's attention on. I think there's a time and place for that, for sure, especially when you're sort of in the early growth stages and you just have to keep hitting targets in order to kind of keep growing the business at a certain stage. I think as we become more mature, the expectations that I have shifted, and they're now, you need to innovate in addition to growing your business and hitting your execution targets. And then from there, the senior leaders and managers can execute and operationalize innovation, right? It's not enough to say, oh, we're going to innovate, right? You actually have to put thought and strategy, put analysis, put resources against the actual innovation, right? You have to be willing to fail, candidly willing to lose money in some of these categories in order to innovate. And so, in addition to sort of operational plans that say, how are you going to go from A to B, this quarter, the expectation is what are you going to innovate on? If you're on the go-to-market side, are you innovating on new customer segments? Are you innovating on new geographies? From a product perspective, what new things are we willing to experiment on that may not be sort of within the four walls of the existing business? and then being able to sort of set that expectation that number one, there is an expectation to experiment and try new things, and number two, that it's okay to fail, that we want to learn from those things and try and move forward from there as well. So I think, fundamentally it does come down to expectations, and you're right, competition, for instance, is a really meaty subject, but I would say that competition, overall is great because it forces innovation. It forces the companies to stay on their feet and to really think outside the box to keep growing their organizations.
Yeah, you brought up there's outside forces, and then there's sort of the inside expectations. So being resilient, right? We expect things to not go right, and we're going to bounce back from them. The other one that I've learned, and it's hard, is creating a learning organization so you're listening and you have a mechanism for being able to capture all the information and feedback you're getting from customers in a way that allows everybody to be able to understand it and then be able to innovate on it, because somebody in one part of the business might be working on something that solves a problem in some other part of the business, and if there's no way for that information to move around, it's very difficult to innovate in a way that's going to be demand driven from the customer side. We're gonna shift gears a little bit here, and I'm gonna go into kind of a very specific Q&A round. We've got a bunch of questions. Some of I've been able to capture into the story. Some are a little bit more specific. So we'll wrap up in the next probably 10 minutes or so. If you have other questions, please post them to the chat, and I'll scoop them up as best we can. So the first one that I want to dig in on is, this is DC Startup Week. The vast majority of the people here are in the DC, Maryland, Virginia region. You obviously started in the Maryland space. You moved out to the Valley, you came back, you then moved to DC. The core question is, what did you observe? What did you expect to get when you moved to Silicon Valley? And was there anything that you saw there or experienced there that you could not find when you came back to DC? So what was the draw to go there? And then when you came back, was there anything missing?
It's a good question. I wish it was very strategic like that. I think fundamentally it was, we were in our early 20s. We didn't know what we were doing. You look at all the cool tech companies, and they're all based in the Valley, right? So I think you go out there and you realize it's not all the glitz and glamour that people make it out to be. It's still a lot of grind, a lot of work. I would say that the DC tech community has come a long way, over the last couple of years for sure. It's grown almost exponentially, in terms of the number of people involved and the ecosystem players and like the accelerators and the investors and the supporters and advisors and everything. When we were picking our business back in 2012, 2013, I would say that Silicon Valley was probably still the only place that has enough inertia or sort of depth of everything that you're looking for in the same sort of ecosystem, right? Back then, you had an insane deep of technical talent that were also willing to jump ship to an early stage company. So it's not enough to have like a lot of software engineers. The engineers have to be able to be willing to go join a 3-person company and stake their careers on it, right? So the number of people that are willing to do that in the Valley was just so astronomically high. You had capital partners and investors. Literally, every other door, commercial real estate property, it would be some venture capital firm or some angel group or whatever the case is that you could just sort of, walk down, you could walk into a networking event and, be talking to, top 50 venture capital firm or something. Right. And so and then, just everything about the Valley was just pure tech all the time. And there's plus and minuses to that for sure, because it sort of creates this tunnel vision, if you will, around things. And there's I've seen this now because I'm now out of that ecosystem and looking into it. A lot of the technologies that get hyped up very, very hard or whatever the case is that don't end up panning out or whatever. I think you sort of look at it from a bystander perspective, looking into Silicon Valley, you're like, I don't know, what the hell are these guys talking about, right? So because ultimately, business, it doesn't matter if you're in technology or in retail or in pharmaceuticals or whatever the case is, business is about your customers. And it's about finding their needs and being able to deliver solutions to their needs. And it doesn't matter what the mechanism for doing that is. And so that's when we moved our company out to Washington. We knew our customers were here, and we wanted to be closer to them and listen to them. And that's the biggest thing that we got out here, is that there are certain sectors that have done extremely well in the DC area, right? Government, for instance, is probably the biggest one, but you have other industries like ed tech or hospitality that have done extremely well with an ecosystem of players that we felt like we could sort of leverage in some broader capacity. And so that I think has been very helpful overall.
Yeah, it is interesting. I've spent a bunch of time in the Valley. I never lived there, but I had the same observation. All of the companies I've started have been in kind of the mid-Atlantic to the Northeast. And I always liked getting the information from there and sort of understanding what it is that they're paying attention to and why, and the technology and the innovation. But I kind of liked being far away from the noise and the cacophony of the bubble that they all appeared to be in. And oftentimes, to your point, their customers are not necessarily in that same bubble. And so being outside of it could really be a big advantage. There's some other disadvantages, but I agree with you. There's an advantage if you play into that as a strength. I want to go to the next question is around product strategy. You mentioned when you first started predictive analytics, machine learning, AI, and things turned more into more of a workflow type management. At least that was what the questioner heard from one of your earlier comments. How did you observe that, and how did it change, or is it now a combination where the workflow and the embedding things into how people operate and then just bringing the technology along? Was there a key insight that you observed that made you make that change?
It's not these kind of eureka moments, I think, in startup land, really don't happen sort of overnight. I think, you're in the market for a while, and you just start observing things, right? I mean, you're in customer meetings, and you're listening to feedback from customers, and you're listening to kind of your product managers and your account managers, and then especially as you kind of get into early growth stages, you got a couple million of ARR under your belt and starting to scale the organization. I remember listening to customer calls, and we thought some of this stuff was pretty cool, right? I mean, predictive analytics and really sexy machine learning, and like just injecting really, really cool technology. And then you realize that the customers don't really care, right? They just want to do their jobs. They want to do it better. And so, I think you start to get a feel for the maturity of the market with respect to technology, what their willingness to adopt certain technologies are. And then you start to calibrate your product strategy around kind of what that customer response is. And so, we still incorporate quite a number of machine learning capabilities and predictive analytics, but we just do it sort of behind the scenes, right? Where we're delivering really, really integrated workflow, better search relevancy, whatever the case is. You talk about it sort of as a cool element and as part of the technology, but really what the customers care about are, how is it going to help me do my job better? And that's the key insight, is I think, this is also partially because we were young and really didn't know what we were doing. But as an enterprise company, we went in thinking about, the technology, and then we came out understanding the go-to-market and putting a much more heavy emphasis on the product marketing, the positioning, how it impacts people's workflow, and then feeding that feedback back into kind of workflow solutions. And I think big companies make this mistake as well. I mean, in terms, and I won't call any specific companies up, but certainly a lot of companies have partnered with IBM Watson, to get the flashy marketing thing, into their workflow. But ultimately, the thing that powers their technology is just people clicking through and generating reports and looking at dashboards on their day-to-day basis.
Yeah, it's a big thing to keep in mind with, the meeting the customer really where they are, even if it's not with even if they don't understand or appreciate the whiz-bang technology that sits underneath it. So it reminds me of Simon Sinek's quote around customers want a quarter-inch hole. They don't necessarily want a quarter-inch drill bit. So getting after the why, or the what are they trying to achieve, is a big part of it. I'm going to go after one more question that is then we'll kind of wrap up here. So one of the questions is around sort of capital strategies. There's a lot of stuff happening right now. The IPO market has gotten really hot. There are these special purpose vehicles, SPACs. We've had a few questions about, does any of that, do you pay any attention to it? Does it make any sense? Do you have a point of view about whether there's a bigger opportunity there now than there was before the pandemic, or as you look out in the future, not necessarily for Fiscal Note, but sort of for any company that's in this kind of in the market right now in the US?
I think from a founder perspective, there's a lot of heavy emphasis on venture capital. All the press and all of the, articles and the advice and whatnot is sort of geared around how do you raise venture capital, blah, 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 right? The reality about venture capital is it's a very small sliver of the overall financing ecosystem. If you think about, and this is really trying to understand, finance, but if you think about the financial markets, our financial markets have a lot of different financial products within them, right? You've got, senior credit facilities, mezzanine credit facilities, convertible bonds, preferred equity, common equity, government grants, all these different things that sort of exist along the entire ecosystem. And so thinking about what is the optimal capital strategy for the business is probably one of the biggest decisions that a founder will make. And so I think when it comes to, and then not only that, but within each of those categories, the types of investors that are willing to kind of come into that type of a structure, right? So, as you mentioned, Scott, like there's sort of three separate ways now of going public: your traditional IPO, your SPAC, your direct listing, and the like. In the private equity markets, you've got a whole range of players, right? That range from buyout funds to venture capital funds to early growth funds, late growth funds, predatory funds, family offices, all these different things that sort of exist within this ecosystem. So the question that I think about a lot as sort of a founder with sort of a little bit of experience kind of looking back is, I think that the best thing to do is understand what your company's growth strategy is and then work backwards from there, right? So if you know that you need, for instance, a lot of capital, that you're an extremely capital intensive business, that it's sort of, let's say you're Amazon early days, you need to raise billions of dollars to build these factories and fulfillment centers, then there's a certain set of capital strategies that align against that. You probably don't want to take all equity. You want to probably use very heavy amounts of debt to structure it against these asset heavy elements, all these different things that kind of have to come together. If you are in a consumer space, right, and you're hitting product market fit, you've got 2, 3, 4 million users, you're doubling every 6 months, you need to blow out sales and marketing, but it's still relatively risky. That there's only a limited set of players that kind of go into that capital space. And so you kind of align your capital strategy against that. But the worst thing that a founder can do is not align their growth strategy and just focus on the capital. In that sense, you just, A, you're not going to be successful. B, if you are successful, your incentives between your investors and your company are now misaligned. And so I think, when it comes to our business or any other business, the fundamental thing that I think about is, what is our growth strategy, right? How much does it involve this type of strategy versus that type of strategy? How much of it is going to involve M&A? How much is it going to involve, really risky bets, whatever the case is? And then how do we align the capital markets against the strategy that we have? If you're very heavy in M&A, for instance, you've got to find partners that can flex up with you to provide additional capital, for instance. So you can't really partner with certain types of investors that don't have that capacity. So there's a lot of considerations when you kind of go into it, but fundamentally, it's really thinking about, the growth strategy and then the capital markets and their alignment against those. IPOs and SPACs and all these different things, they're interesting mechanisms, but they're all just a means to an end, ultimately, of trying to grow a business.
Absolutely. And I can't put more of an emphasis on what are your business objectives. You frame them as growth strategy. What are you trying to achieve, and how does capital get you to achieve those things? I see a lot of founders doing the reverse and thinking about, what do I need to do to get capital? And it's like, no, flip that around and figure out what you need to get after. Well, we have had a really, really great session here. Tim, thank you. That was awesome. Really a great way to kick off DC Startup Week, and really appreciate it. So thank you. Thank you all for joining us today, and shout out to Stephanie, our ASL interpreter. She can, you have to sign that so that we can, there you go. And We're going to be doing this all week. So join us tomorrow at 11 a.m. Eastern time with David Hall, who's a managing partner at Revolution's Rise of the Rest. He's also got a long history of background in investing in lots of different companies, both outside of Silicon Valley, New York City, and Boston. So think about it all around the world. Outside of our DC Startup Week, Founders Focus does something very similar to this twice a week. You can find more at foundersfocus.com. You can sign up there. You can also get one-on-one time with me. I know we didn't get to everybody's questions today, but really appreciate you all participating. We got to a lot of them. So with that, I'm going to hand things back to Rachel, who will wrap up from DC Startup Week. And stay awesome, stay healthy, everybody.
Hello, everyone. Thank you so much, Scott and Tim, for sharing your insights today. We're so excited, Scott, to have you for the next 4 days at 11 a.m. Asking all the founders questions, joined by an amazing lineup of founders and experts across the next couple of days. Thank you for everyone for joining on the conversation. We have a couple events popping up next. We have 2 lunch and learn conversations. One, think like an entrepreneur, make like an artist, as well as how to make sure you get everything done starting on a Monday. So if you go into Attendify, you're able to just click on those next Zoom links to join us from 12 to 1, as well as a whole lineup for the rest of the day. We also ask you to go into Attendify, share any insights that you've learned from the chat or post it on social media. We would love to have you. And I look forward to seeing you, Scott, tomorrow at 11 a.m. and hopefully seeing everyone here as well. Thank you guys so much.